three key takeaways from the RBI Governor Shaktikanta Das's decision on the Monetary Policy Committee. First, that we're showing you on your screen right now, the Reserve Bank of India has kept its key lending rate, which is the repo rate, unchanged for the second consecutive meeting. The repo rate has been unchanged since April. In April as well, the Reserve Bank of India kept it unchanged at 6.5%. And even now, the repo rate is at that rate, 6.5% unchanged. Now, why is the Reserve Bank not changing the repo rate? The Reserve Bank has hit pause on hiking repo rates after repeatedly increasing the repo rates last year, because now inflation is slowly coming down. In the month of April, inflation fell for the third consecutive month. And in fact, for the last couple of months, inflation has been within the Reserve Bank's 6% upper threshold. So that's why the Reserve Bank has been keeping the repo rate unchanged. And what is the relation really between the repo rate and inflation? The repo rate essentially is the rate at which the Reserve Bank of India gives loans to commercial banks. So like we get our loans from banks such as ICICI or Kotak or SBI, these banks get their loans from the Reserve Bank of India, from the central bank. So repo rate is the rate, the interest rate that the Reserve Bank charges these commercial banks. And when this rate goes up, then these commercial banks also have to pay a higher interest rate naturally to get their loans from the Reserve Bank. So they pass on this higher interest rate to consumers like you and me when we go out to get our loans. So this repo rate remaining unchanged means that our loan interest rates are not likely to go up now. And the same stands for deposit rates as well. Our deposit rates and loan interest rates are likely to not go further up now, because the Reserve Bank of India for the second straight meeting has kept the repo rate unchanged. Now, the other important key takeaway from the Reserve Bank of India's press conference on the monetary policy decision is that the inflation forecast has been kept unchanged at 6.5%. The inflation forecast that the Reserve Bank of India, the GDP forecast, I beg your pardon, that the Reserve Bank of India had given out earlier, the financial year 2024 GDP forecast was 6.5%, and that has been kept unchanged at 6.5% because the RBI governor said that the Indian economy stands out as strong and resilient amid global uncertainties and amid global economic volatilities as well. Now, the third important point, let's talk about inflation now. And the Reserve Bank of India governor has kept inflation forecast for financial year 2024 at 5.1%. Now, that is marginally lower than the previous forecast that the Reserve Bank had made in the month of April. Back then, it was kept at 5.2%, but now the Reserve Bank of India governor has said that inflation forecast for the current financial year is at 5.1%. So a marginal reduction there, but overall, no major changes in the Reserve Bank of India's stance. They are still focusing on withdrawal of accommodation, which means that we can expect, if inflation continues on this downward trend, we can expect in the further meetings as well, the repo rate to remain unchanged. In other important announcements that the Reserve Bank of India governor has made, that there are still risks to the economic growth in India. He says that weak external demand, global market volatilities, along with that geopolitical tensions, of course, because of the war, and the El Nino effect that could impact India's monsoon. All of these are downside risks to the to the Indian economy. They could pose a negative impact for the Indian economy. So these are risks that he has flagged out. But apart from that, he was largely optimistic on the Indian economy for the financial year 2023 growth rate that came out just recently, and that was at 7.2%, which was above the RBI's forecast. So the governor said that growth rate was above what we expected, and that just reflects that the Indian economy is resilient, Indian economy is strong if you compare it with the global economy. So largely optimistic on the Indian economy. And important key takeaways that the Reserve Bank of India has kept the lending rate unchanged, meaning your loan interest rates are likely to not go up further. Along with that, the inflation forecast marginally cut to 5.1%. The GDP growth forecast kept the same for financial year 2024 at 6.5%. There's that graph that shows you that the repo rate, the lending rate, has remained unchanged ever since February 2023.